May we be standing for the national anthem.
And dancing of Zambia, proud and free, land of wealth and joy in unity, victors in the struggle for the right. We won freedom's fight, oh, one, strong and free. Africa is our own motherland, fashioned with and blessed by those good men. Let us, all our people, join as one, brothers under the sun. Oh, one, strong and free. One land and one nation is our cry. Dignity and peace in Zambia's sky, like a noble eagle in its flight. Zambia, praise to thee, oh, one, strong and free. Praise be to God, praise be, bless our great Zambia, Zambia, Zambia. Green and we stand under the flag of our land. Zambia, praise to thee, oh, one, strong and free.
We may remain standing for a prayer by Mr. Edwin Tembo.
Shall we pray? Our God and everlasting Father, we come before you in humility with our hearts full of thanksgiving. We thank you for your word, because in Proverbs 16, verse 3, it says, commit everything that you do to the Lord, and he will establish your plans. Therefore, God, we commit this program in your hands. Run with us from the beginning till the end. It's in Jesus' name that we pray. Amen.
Thank you very much, Edwin. We may be seated. Allow me to acknowledge the presence of the governor, the deputy governors, members of the Monetary Policy Committee, directors here present, members of the press, ladies and gentlemen. As you may be aware, the Monetary Policy Committee was sitting on Monday and Tuesday, and this morning the governor will be announcing the decision of the committee. Let me introduce to you the dignitaries in front of you. We have the governor, who is flanked by the two deputy governors. Deputy governor in charge of operations, Dr. Francis Chipimo, on his right, and deputy governor in charge of administration, Mrs. Reka Chifue Muhango, on his left. Next to Mrs. Muhango, we have director in charge of research, Dr. Jonathan Chipili. Next to Dr. Chipimo, we have director in charge of financial stability, Mr. Goodson Kataya. I will be your master of ceremony this morning. My name is Besnat Mwanza. Without further ado, I will at this point invite the governor to address the press. Governor.
Let me join Besnat in welcoming you to this first briefing for the 2026 year. But before doing so, allow me to recognize the presence of my colleagues in the MPC and the deputy governors and directors, Bank of Zambia, and you members of the press here present and those online. Like in previous presentations, I have about 8 sections that I'll cover in sharing the information that we need to share with you. We'll start obviously with the decision that the committee made, which was done yesterday, but the deliberations, as you had started on Monday. Then we'll look at the factors which underpin that decision, which are in the 6 parts: the inflation outlook, the outturn and outlook, the foreign exchange market, gross international reserves, current account, which is the external sector, credit developments in the domestic market, and economic activity, looking at what is happening to GDP and other related variables. At our meeting starting Monday, the Monetary Policy Committee decided to reduce the monetary policy rate by 75 basis points to 13.5%. That is, we reduced the policy rate by 0.75% to 13.5%. What underlied this decision? The committee took into account the following factors. One, that there had been a further decline in inflation in the fourth quarter of 2025. Then when we did projections, which we normally do during these meetings, we observed that the inflation is projected to fall faster into the 6 to 8% target band than our forecast showed in November last year. And thirdly, with these factors taking place, that is the inflation coming down and the projection also showing that it's going to come down even further, it was necessary that we look at the stance of monetary policy and maintain it at an appropriate level. So that was the other overriding reason why we had to make the 75 basis point adjustment to the policy rate. Now, where is this coming from? So we start from the inflation outturn. Inflation continued to decelerate in the fourth quarter of 2025. Overall inflation declined to 11.2% in December 2025 from 12.3% in September 2025. I think this is better explained in a table. This is the regular table that we share with you, but you see the progression. It's divided into two parts. We have the average, which is the top part of the table, and then the end period numbers in the bottom part of the table. So if you cast your eyes now to the first row below the dates, you see that inflation, overall inflation, has been coming down. Actually, if you go back to Q1 2025, you see that it was 16.7, it came down to 15.3, then 12.3 in the third quarter, which is the quarter I was referring to when we met in November last year. And currently, for the fourth quarter, it is at 11.3%. Now, when you look at the components of that, which is food and non-food, you note that they obviously were the ones driving that. They were coming down. You see that in the case of non-food inflation, actually it came at the top end of the target band at 8%. In terms of the end period numbers, it's the same story. You see that from the Q3 2025, inflation was at 12.3, and by December, which is the last month of the quarter, it was 11.2%. Then when you look at the components, we see that they were also coming down to give rise to that change. This is further explained by the components here. When we look on the left-hand side is the food inflation, and on the right-hand side is non-food. This is a chart, I think, which Zamstat also shares, so I don't think I need to take much of your time there, but just to show that you see the components that are driving those. If you look at the yellow on the food side, that's fish, and then followed by meat, oils and fats. And this time even vegetables was kind of responding to some extent. Then when you look at the non-food, which in effect the policy rate has more a heavier influence over, you see that's why it has even come to 8% in the fourth quarter of the year. So the way to look at this is you look at the size of the bar from the previous period to the next period. You see the bar which shrink or reduce in size is showing where the much impact is coming from. Then in January, inflation fell even more sharply to 9.4%. So this is the much talked about moving into single digits that had been quite elusive for some time, but there you are. In January, inflation came into single digits. What were the key drivers for this? We see that the impact of bumper maize harvest that we had the previous marketing season continues to have an effect on that. And then the appreciation of the kwacha against major currencies is another strong variable that is at play in bringing inflation down. We'll come back to this in a bit in terms of what, particularly on the exchange rate, what is going on there. So then in terms of outlook, remember our decision is based on, or our decisions are based on the outturn in inflation, the outlook, and the risks that we see in the horizon. So turning to the outlook, we see that inflation is projected to fall into the 6 to 8% target band at a faster pace than was forecast in November 2025. It is expected to be within the band by the second quarter of 2026 and move to the lower bound by the second quarter of 2027. In terms of annual averages, now inflation is forecast to be 6.9% for 2026 as a whole and 6.3% in 2027. Now, last time you note that we had only covered 3 quarters of 2027 because of our forecasting horizon. Now we have the full 2027 coverage. The more positive outlook largely reflects the impact of the lagged effects of the recent appreciation of the kwacha and expected favorable agricultural output. I think reports abound about what this current farming season is poising to be. So we see that to have some very positive impact on food inflation. As a matter of fact, we see that we still have stocks from the previous season, and now with the new crop coming, it means that there will be more to offer, and that would have an impact on the prices of the agricultural product. Over the forecast horizon, the risks to inflation are assessed to remain tilted to the downside. These include favorable weather conditions, which is related to what I said about the food situation of agricultural, favorable agricultural output, supportive external conditions reflected in higher copper prices. I'm sure you have been following reports that copper prices are at their highest in the recent memory. In fact, it's historic, along with the gold. So that is giving us some positive effects on the ground. Equally, you see that there has been an increase in the mining output of copper, so that together is helping to provide more resources to the domestic economy. Then the Other thing is continued macroeconomic stability. What we are saying is that what has come out, as you have read through the conclusion of the sixth review, where it is clearly pointed out we were able to meet all the objectives of that 38-month ECF, extended credit facility arrangement that we had with the IMF. So that macroeconomic stability is expected to stay in place. And with that in place, it should give us some further positive impact on inflation. Now, in terms of graphically, we now show you the way we do the projections. If you look on the left side of the slide, you see there are two lines there, dotted lines after the vertical line there. You see that the first, which is the black or dark blue line, that was our forecast in November. You can see that inflation was even then trending downwards, even going to the lower bound. But our forecast now is showing an even more aggressive fall. In other words, that's the sharp fall that we are referring to, that it may even breach the lower bound of that target band. So that's the red dotted line that we show there. The annual numbers, as I indicated, for 2026, our current projection is that it will be 6.9%, and for 2027, 6.3%. Then for the last projection, it was projected to be 7.6%, and for the 3 quarters in the year, it was at 6.6%. So you can see that there is further progress in terms of the reduction in inflation. Then we turn on to the foreign exchange market. We have already been talking, or we have heard about the appreciation of the kwacha. So the kwacha appreciated further in the fourth quarter by 4.1%. The previous quarter, it had appreciated by 3.1% against the US dollar. This was supported by the pickup in foreign exchange supply and the improved market sentiments. So the chart on the right gives you graphically what was happening. You see there's that line there in the middle where some charts, some bars are below. When it is below that chart, that line, it means that it's an appreciation. And when it is above, it means that we have a depreciation. So you can see actually that in the fourth quarter as a whole, that's the appreciation we're referring to then, but then there is a massive appreciation in the month of January, which is the brown bar after the dotted vertical line that you see there. That's the much talked about appreciation that the kwacha recorded during the month of January. This has continued in February. Now, oftentimes people ask, is this sustainable? Well, it's for you to judge. It has been playing in those ranges for quite some time now, and those who are able to make decisions, they definitely have taken advantage of that and benefited from it. So what we are saying is that what then has been driving this? One, obviously, we have been talking about the credit rating upgrades that were done by 2 of our rating agencies. And then we had in December the staff level agreement with the IMF mission, which helped to move the market by way of positive sentiments. So this is not a small matter because in the previous times, sentiments were tilted against us. So that you have positive sentiments, you don't take it for granted. It means that people are recognizing that there are some positive developments that have happened in the economy. More so with the credit ratings that we saw, because now it was confirmation that we have come out of the default status that we were in since November 2020. The year-to-date rate of appreciation of the kwacha against the US dollar is current at 14.2%. The key drivers are continued strong supply of foreign exchange by the mining sector. We'll see more details in a little bit. And financial flows from foreign financial institutions. You recall that recently we did adjust the cap that was there on their participation in the primary auctions of government securities. So we adjusted that from 5% to 23%, and then we see some inflows by those wishing to invest in our domestic securities. It's also important to point out that the interest has mainly been in the longer dated instruments, which is another indication that they see that this run that we have is expected to continue for much longer. But we should also remember that we have been undertaking a number of reforms. I think in the past, you tended to see these in isolation, that, for example, we talk about the board rates not being followed. That has implications on the operations of the market, that some of the players were not following the rules as they were coming from outside. We made some adjustments. And more recently, we did introduce the foreign currency regulations, which we debated at great length since 2024, and finally on December 2026, we did issue those directives. They too, together with those other reforms that we did in the foreign exchange market, along with other reforms that the government has taken, for example, this fiscal consolidation, the completion of the debt restructuring, all have an impact on what we are seeing here. So it's not just one particular move that makes these changes come about. We continue to show the movement in the exchange rate in the foreign exchange market. So here what we're trying to show you, on the left-hand side is the chart showing the behavior of the US dollar index, which is the brown one, and the green one is the emerging markets in the currencies against the US dollar. So what you can see is that the basket of these currencies have been also gaining against the US dollar during this period. On the right-hand side, we share with you how different currencies have fared against the US dollar in this period. So this was in the fourth quarter of last year. So what you see here at the top there is the Ghanaian cedi, which appreciated by 7.3%. Now, our kwacha is the third there, 4.1, which I referred to there. Now, the way to read this is that you have that vertical line, which is the zero line. If it's the chart is, the bar is on the right-hand side, it means that that's an appreciation. If it's on the left-hand side, it means that that's a depreciation. So we thought that you may want to see how other currencies are behaving against the US dollar. Continuing with the foreign exchange market, I mentioned that supply of foreign currency has improved in the market, and driven mainly by the mining sector. So what we note is that despite the slight reduction in the mining sectors, they still sold over $400 million directly to the market. So this is the chart on the right here. If you take the last bar there are two colors there you see. There's the blue and the brown. So the blue one is showing what was produced and what was sold to the market. The 418, so you see there's 418. That's the one we are saying is over 400 million. That's what we got, which was sold to the market. The balance is what we got as mineral taxes. Now, what is important also to note here is that if you look at the brown shaded part, you see that there the amount is much larger compared to the third quarter. So this is where we are telling you that there is quite some good flow of foreign currency in the economy, and more so what we received as tax payments. So we received $344.6 million during the fourth quarter. So this pushed the fourth quarter as a whole. So if you add those to $759.4 million compared to $636.8 million in the third quarter. So these are not imaginary numbers as sometimes is thought that, where is this happening? There it is. These are real numbers which are collected in various channels that we have. Further, given the stronger exchange flows, a net supply of 93 million was recorded in the fourth quarter against net demand of 23.6 million in the third quarter. So the supply by foreign financial institutions, like I indicated, increased to a net of $335.6 million in the fourth quarter from $19.6 million in the third quarter. So you can see the massive increase in that particular group in terms of supply of foreign exchange. The bank, that means the central bank, was a net buyer of $62.4 million to moderate the volatility in the exchange rate. You see, we sell and buy foreign exchange to manage the volatility as we see fit. If you see that it is moving too fast, then we move in to buy to moderate that. Equally, if it is moving too fast, depreciating, we move in to provide support to the market to moderate that volatility. Then in terms of gross reserves, I think what had been in the media for some time was the $5.2 billion. Well, by December, the reserves had increased to $5.5 billion. Now, to preempt a question, because you see this was December, we hadn't yet concluded the sixth review of the ECF. As you may recall, the sixth review was only done on the 27th of January, which is past that December mark. So before you prepare yourself to ask the question, this 5.5 does not include that disbursement, which came after the December end. And also it's our policy not to share this information instantaneously, meaning we don't provide this information with a lag. But since was this extraordinary development during this period, that's why we are making reference to that. Now, in terms of import cover, the 5.5 was 4.8 months of import cover, whereas the other one was 5.2. Now, people might be wondering, 5.5, you are getting less import cover as opposed to 5.2, where you are getting more. It's the adjustment that the import cover recorded in the fourth quarter is reduced due to the upward adjustment in the imports. There was some numbers that were not properly calibrated to reflect the total amount of imports that were recorded, and that's why when those were taken into account, you find that this is 4.8. But what is important to bear in mind is that it means that if you have a larger import cover, particularly if these are for intermediate goods, then it means that you are increasing your productive capacity. So, whereas at the time it is being recorded, it may appear to be a negative, but in effect, you are creating the conditions for improvement going forward. So, that you have imports rising without looking at the nature, don't jump to the conclusion that that's bad now that we have less import cover. It means that you are growing the economy by bringing in inputs. This is the same message I think we would like to convey when you have movements such as we are seeing in the exchange rate. It affords importers of these raw materials an opportunity to import them at a lower cost and improve their productive capacity. The other information that you want to share is the gold that we are holding. During the quarter, we bought an additional 175.2 kilograms of gold. With that purchase, the total amount that we are holding now is 3,226.51 kilograms. You know, gold you have to measure to the right because the pricing is by ounce or by gram. So don't leave out the 0.1, you'll be losing. Look at the price of gold where it is now. It is $5,031.4 per ounce. So this is a record high that gold has reached. Current account, this is now looking at how we are faring vis-a-vis the external world. What we are saying that the current account deficit widened in the fourth quarter to 140 million, which is 2% of GDP from 28.5 million. Now, this was underpinned, like I said, by net imports, which were related to the transportation costs attributed to non-resident alongside a decline, unfortunately, in tourism receipts. So that's but this is a moving number because we do make these adjustments every quarter. We are through surveys. So this number is never really constant. So this time around, we are pointing this. But remember what I said earlier, that we have supportive external environment, which means that the terms of trade are positive. So we could very well see a changed situation going forward. What we have observed is that during the fourth quarter, the credit growth reduced to 14.4% from 17.4% in the previous quarter. The credit to the private sector came down to 15.7% from 21.4%. This was due to loan repayments by firms in the wholesale, construction, and the agriculture sector. So when you pay back, that reduces the amount that is outstanding, and that accounts for that decline. When it comes to the government side, there was this repayment of foreign currency loans under the liability management operation. You recall that the government had undertaken a liability management operation. It was a matter which was presented even to Parliament to clear some few arrears. So this, by clearing those arrears, it means that it reduced its indebtedness and hence the decline in credit overall in the economy. Government securities market. Total outstanding government securities stood at 253.7 billion kwacha at the end December. Non-residents accounted for about 26% of this. So what we are saying is that during this period, the non-resident holders increased their holdings by 4.2 billion kwacha, which brought their total holdings to 65.7 billion kwacha. This is what is shown on the chart on the right. Now we turn to the real sector, the economic activity, where here again we see that there are continued improvements. This is reflected on the chart on the right-hand side when you look at the Stanbic Bank Zambia Purchasing Managers Index. Here again, just to refresh your memory, when the bars are below that horizontal line, it means that economic activity has reduced. But if it's above, it means that economic activity is improving. So you can see the green persisting to the current period that we are referring to. So which means that economic activity is quite healthy, and we would like that to continue. We have another measure of the activities. This is from our own quarterly survey of business opinions and expectations. There too, we see this being reflected. So this spider chart, what you look at the blue line, the outer shell, which is the blue, that is the latest. It's eclipsing all the others, which means that there is growth. If it is inside, it was to be inside, it means that there is a shrinkage of economic activity. So this, we see that is due to improved business conditions, which were supported by favorable exchange rate performance and improved electricity supply during the period. Further, in terms of now projections of domestic growth, we show again that the medium term shows that the growth prospects remain very favorable. So growth in the period ahead we see being driven by activities in ICT, mining, agriculture, electricity generation, tourism, and construction sectors. So you see on the right-hand side of the screen, the chart there is all those are different measures. The people are getting their focus and they are all showing that growth is poised to go up. So to conclude the presentation, we are just reiterating that the Monetary Policy Committee decided to reduce the monetary policy rate by 75 basis points, 13.5%. This is underpinned by further decline in inflation in the fourth quarter, the projected faster fall of inflation into the 6 to 8% target band than was forecast. Now, the two developments, that is the decline in inflation, the decline even faster of inflation in the forecast period, means that if we did not adjust the monetary policy stance, it was going to be much tighter, which would do militating against those positive developments that we are talking about in terms of economic activity, growing the credit in the economy. I submit. Thank you.
Thank you very much, Governor, for that comprehensive presentation. We are now going to go into a question and answer session. As always, we'll take 3 questions at a go. Please state the institution you represent before you ask your question. So give us your name and where you are coming from, then you can proceed to ask your question. Who will be the first taker?
Taonga from Bloomberg. So we saw an oversubscription in government securities after the bank's decision to raise to 23% the cap on non-resident participation. Now, in percentage terms, what was the level of non-resident participation in the bond and treasury bill auctions held after the raising of their participation?
My name is Cecilia Chiluba from Money FM. Historically, adjustments to the policy rate have not translated into lower lending rates. What concrete measures is the bank putting in place to ensure that today's policy decision effectively reduces borrowing costs for businesses and consumers? Thank you.
My name is Caro Sichone from Zambian Business Times. My question is relating to Zambia's acceptance to receiving mining tax from Chinese-owned state mines. I would like to find out if you could disclose how much has been gotten from the system since its initiation.
Governor, you may respond to those 3 questions, after which we'll get the questions that have come on through our online audience. You may proceed, Governor.
Thank you very much, Tawanga, for that question. Indeed, there was quite a big inflow of non-residents with that adjustment. I think my colleague from Financial Market can confirm, but it was about 49% of that. Is that correct, Dr. Pam?
Yes, Governor, that's 49%.
Yes. Okay. Then the colleague from Money FM. This is a tricky one in that, yes, in the past you say that when the policy rate is reduced, you don't quite see a corresponding reduction in lending rates. Now, there are 2 aspects to that. I'm sure immediate following this, you will see an advert from your bank that they have adjusted the rates that are linked to the policy rate by the margin that the policy rate has been reduced. That does happen, but I guess what you are really talking about is an average of what happens. I think during the town hall, we did share a slide where we are showing where the lending rates are versus the securities, the rates for the securities, that's the bonds and the treasury bills. This is one of those things that we continue to point out and work towards. What we get from the banks is that they cannot immediately adjust these because it means that they may have to recall loans and or restructure loans in such a way that they don't disrupt their operations. But with the inflation coming down as it is, with the policy rate coming down as it is, with the fiscal deficit also coming down, fiscal consolidation really getting entrenched, we don't see what will hold the rates up to where they are currently. So it's a matter of time before we see those adjustments happening, but they don't indeed happen instantly when these adjustments are made. Just picture this, you are owing the bank the money, right? So in their books, they have indicated that they are going to get so much from that loan. Then we come, which is not what they had planned, and make this adjustment, which is a policy decision. So they have to make those adjustments in their cash flows to reflect that. But sometimes why this doesn't happen quick enough is because of the instability in these changes that we have been experiencing. But now we have had a good run of these variables going into the downward direction. There was also the issue of credit rating. You note that in 2020, when we defaulted, the country was adversely rated. So that remained a sticky point for the financial institutions, because they are also getting the treatment that we get as a country when they say, oh, where are you from? From Zambia. Oh, where are they defaulted? So that has implications of that. So this is why the upgrade that we saw was not a simple matter. It was very significant because it changes the narrative that you are no longer a defaulter. It means that you can begin to do business. Now, there's risk appetite, which they assess. So we are expecting that going forward, they should be also revisiting their lending policies, including the decline, which we have seen with what Tawanga was asking about, the inflow of non-residents coming in. The lending, the yield rates in the government securities came down further, which means that the banks participating as they do in those, it means that that source of income is also being affected. So what we expect that is conventional lending should also begin to take place. So with reduced inflation and the competition, if that is really thriving, we should see policy rate, lending rates coming down. Long answer, but because it's not very straightforward, that's one for one. Dijo, you want to take a stab on the renminbi? What do we have?
Yeah, I think we'd have to confirm the number, Governor, but I think it's around 300 million Chinese yuan, which I think is around $445 million, but we can confirm that number.
So before we end, we can get, I think, colleagues can.
Thank you very much, Governor. Governor, the questions coming in from our online audience. Nkululelo Matulula wants to find out, with the desired inflation rate being 6 to 8%, what happens if it goes below 6%? For example, if it goes to 4%, will Bank of Zambia intervene to raise it to the desired range? CJ is asking, when is the MPC going to start publishing their minutes? Fanuel Piri is saying, will the central bank consider recalibrating the 6 to 8% target band to lower levels given the current trajectory of inflation? Governor, you may pick those.
You see, first, these are targets that we set for a particular reason, that this is consistent with a stable macro environment, because we say that inflation is a thief in the night. So what happens is that we have to look, and by the way, the target band is set by the Ministry of Finance. We are the executors of that. But of course, you say, hey, don't run away, because you must also be involved in that process. Yes, we are. You see, in mobilizing resources, inflation plays a part to determine the envelope that the government looks. So what we have now, those of you who have been following the ECF arrangement, for example, the extended credit facility, you see that there are bands above these bands as well. Okay? If when we are pursuing the program, the rate went above the upper bound, which it was, but there's a threshold which was also set there. Two things could happen. If it doesn't breach that higher, the higher band, then there is consultation with the staff of the IMF. That's why you hear the staff in their reports, they make reference to the stance of monetary policy, what is happening, and all that. But if it goes even above that, then it's above the pay grade of the staff. It has to go to the board of the IMF executive board for us to explain why did this happen, because it means that the program is no longer tenable with the original conditions unless these are temporary. Similarly, if we go in the lower part, that's where now, if we go below, like we are showing there, it goes below that, then we would have a conversation. What has driven that? Now, if it is the assessment that this is really going to continue to be the case, then we have to discuss with the Ministry of Finance to say that, no, maybe it's time to adjust the test bands. We have come a long way. Prior to these target bands, we used to have a single point of target. You said inflation must be single 9%, for example. I think we had sometimes 8%. Now, we found that in practice, that's not very reasonable. It's not pragmatic. So that's why we came up with this band. So when these changes are taking place, it invites us to review where we sit in terms of the targets. But for now, this is what it is. If it breaches that, we'll look what is driving that and see what adjustments we do. Remember, our role is to bring and keep it within that. There's a chart here which we are no longer showing because I think it made its point, where we say the policy rate being linked to the interbank rate. That is what we observe and then extrapolate that this is going to translate into the global, the wider economy. So these are things that we continuously look at, and if we see that, why is it going there? Is this a permanent change or is a temporary change? Then it invites different kind of actions that we take. I hope that explains to Nkurula. You want to take the next one, teacher?
Thank you for that question. We don't publish the minutes, and we haven't made as an MPC the decision to publish the minutes. But I think Jonathan can confirm it's not all central banks that publish their minutes. Some do, some of the key ones do, the Fed and so on, but we haven't made that determination yet. I think as Governor has been saying, we used to have, for example, the point reference. We moved to a band. In 2012, we introduced a new framework for monetary policy, and we've been developing it slowly. So I think these are things which we'll probably look at as we go forward. Thank you.
You want to confirm? Jonathan?
Maybe, Governor, just to confirm that what we typically see in the minutes is contained in the report that we publish, besides the discussion that goes on in the policy committee meeting. But somehow the governor touches on those issues through his presentations. Thank you.
Yeah, just to allay the fears, because I think what is prompting this question is that, are we being transparent enough? I think that's what is prompting you to raise that question. I think if you look at the amount of information that we share with you is colossal. You see, we even give you the chart, the fund chart, to some extent of the projection. We never used to do this. So this is all in an effort to be as transparent as we get. So as Jonathan is saying, the essential elements of the minutes are reflected in the monetary policy report. You see, we issue the monetary policy statement, monetary policy committee statement, which is issued now as I'm speaking. Then we do this presentation. Then we will have a fuller report, which is the monetary policy report, with the detailed information, including the data sources. For those who are in research, who want to do research, we publish all that. So I don't know what additional mischief we are committing by not publishing the monetary policies, because it depends also the minutes that you get. The minutes can only just be reflecting the decision that you make. They are minutes. That's what others do. So as Jonathan is saying as well, again, that the decisions, this is what we made, it is in the minutes. So I hope that he sets you at ease. Then the adjusting the target band, I think in a way I have touched that, this is a process. We continually look at this depending on the changed circumstances, and we'll make those changes as appropriate.
Thank you very much, Governor. Do we have any further questions in the House? Please walk down to the backdrop.
My name is Tetiwe Mwemba, and I'm from Live Radio. Governor, I believe we have, is it close or barely 6 weeks before the old currency ceases to be legal tender? I would like to find out how much the central bank so far has that you have collected in terms of the old currency. And are you considering extending, should there still be the old currency out there?
My name is Lowland Kalangu from Hot FM. I noticed in the presentation you indicated that the central bank now has a total of 3,226.51 kilograms of gold, and that you purchased 175.23 kilograms in the fourth quarter. There was an announcement last year in August where you had indicated that the bank was finalizing guidelines that would ensure that you begin purchasing gold from artisanal miners. I'd just like to find out how far you have gone with these guidelines, and whether if at all maybe you started purchasing, whether they were part of the 175 which was purchased in the fourth quarter.
My name is Tyndale from the Zambian Business Times, a newspaper. I wanted to find out on the issue of Zambia's USD reserves. How much of these are sitting in Zambia, and how much of these are sitting outside Zambia? And also the other thing I wanted to find out from you is on the issue of the gaining of kwacha. Is there any target, for the government that would want the kwacha to settle? Thank you.
Thank you, Governor. Maybe you can take this one as well from Nicholas Chikoi. He says, given that the monetary policy has been reduced and it's affecting the bank rate directly, are you in any way considering revising the statutory reserve ratio downwards in order to allow banks to have more liquidity to lend out? Governor, you may take those questions.
Thank you very much for those additional questions. I think the old currency, do you have the numbers? Yeah, the DGO will give you the status. Please go ahead.
No, thank you. So for the old currency, we have withdrawn basically about 94% of that. It's about 15.6 billion kwacha. There's about then 6.4% which remains to be withdrawn, around $1 billion, 1.1 billion. That's what we have. I think, as was indicated, the deadline for withdrawal of end March is a hard target. And what we've been doing is to try and increase sensitization to individuals to exchange that money. I think we've also seen some reports of people going to banks and banks refusing. If that's the case, that should not be the case. Those who were designated as people who should exchange money, the banks, other financial institutions, they are still obliged to do that, and we encourage everybody to make sure that they do that by the end date. Thank you, Kal.
Thank you. So please, you are the media. Encourage people to exchange. This notion of that when you have a deadline, you are banking on it being extended. It's not a good one. There are no restrictions so far in terms of how we can do that. So come March 31st, if you are still holding old currency, it will be a collector's item. So please urge people to exchange. Roland, there has been some other developments that have happened since we talked about that. I think the government is taking a more active action here to see how even a refining of gold can be done, because gold is declared as a strategic mineral. So it's no longer just us considering. I think there is a whole mechanism which is in play right now on how this would be done, not the previous, because I think the interest is huge, and you have seen also this gold rush that we have seen. So it requires a much, much more resolute kind of attention. So it's no longer that simple. It's something which the government is working on, and we are part of that process. So at an opportune time, an announcement will be made as to which way we go. I hope that helps.
So, Governor, there was also the point about whether our current gold includes that. It doesn't.
So then the next question was, where do we hold our reserves? This is a money question. You see, money goes where it works. You see, the thing is that even your money, when you say that you have so much money, do you actually know that that money you have is in the bank? All you have is a record of what you hold. That's the balance. That's why I think sometimes people get confused when you say the bank is closed, there's no money. Say, no, but I have my money. Here it is. No, it's a record that you have showing that the bank owes you. That's why deposits are a credit that you give to the banks. Now, for us too, if we are holding the dollars here, then we don't get value for them. You see, so we have to get that money invested in places where it is needed. So that's how we grow that. Check here. If you are holding your foreign currency deposits, do you earn any interest? So in fact, you pay the bank for holding your dollars. So that's why I said this is a money issue. Money we stored where it is used so that it generates a new money. So it's not that we hold the dollars here that you come, it's like if you are at a cashier, they will tell you that the key is held by somebody else. So if you try to come here and say, no, let me see the dollars we have, you won't see them because we have deposited them where we can earn some interest. Now, when we want to use them, we make the withdrawals and make the payments that we want. That's how the money world operates. So don't think that even all these countries which is said, we have reserves that they are keeping. It's only God, perhaps you can keep there in the vault. But these others, they are invested in different places. There is a bank which is a bank for all central banks in the world. This is the Bank for International Settlements in Switzerland. That's where most of these reserves are held. I hope that clarifies that. Now, exchange rate, is there any target date? Again, you see, you have to go back to the policy of government since 1991. The policy of the government is that the exchange rate will be market determined. Why? Because we learned prior to that fixing the exchange rate was more problematic. We had more shortages of literally everything. In fact, one time I went somewhere and said, can you imagine having shortage of salt? This is really real. Because salt is something which you think, you take for granted that it will be there, you know. But we had those problems. Salt, not there, you know. So you have to eat, if you have food, without you have to move with lots of money in the pocket, just in case you run across this. So government said no. So the exchange rate policy is that the exchange rate will be determined by the market. So there is no target exchange rate that we drive for. We just try to manage the volatility so that it doesn't swing. But like I explained last time, when exchange rate moves, sometimes it overshoots. Why? Because it's influenced by the behavior of individuals. You know, there are some who are sitting on the dollars waiting for a certain exchange rate to come. So when they see that, now let me go there. But they add to the demand which was not originally there. Equally, there are those who are holding, say, no, I will keep this as a store value for some time. Then they see that it's appreciating. Now, it means if I wait longer, I will no longer get the kwacha that I'm looking for. So go and supply. That again becomes oversupply, the exchange rate moves. So these are some of the things we try to manage, but it's you, the individuals, the companies, who determine how much you want to hold, how much you want to release. We had seen, because the exchange rate was moving in one direction, if you have two currencies in your possession, you have dollars and kwacha, you find that people will not spend the dollars. They will come, Mwana, can you lend me? I will give you some. I say, but you have dollars, why don't you say, no, this I can't change, you know? So it becomes something we hold. But once we get the exchange rate to that lower level, then it should be easy for people to go in and out of that, then that ensure that we have stability for a longer period. I hope that explains that. Now, you are raising the question of, are we going to revise the stats? It's one thing at a time. We have just given you this major change. So we have to assess how this plays out before we can make another decision. Because then we will not be able to determine what works and what doesn't work. So this is how policy making is done. You don't usually make these at once. You take a step, see how that plays out, and then make the subsequent step. Because if we did that together, then when you come to assess how effective this has been, it will become very difficult. So I hope that helps us. But we are constantly looking at that as well.
Governor, we have a few from our online audience. One of them is coming from Small Scale Miners Association of Zambia. They are saying, how can Bank of Zambia encourage traditional banks to start supporting artisanal and small-scale mining growth in terms of equipment and infrastructure funds in the small-scale mining sector. We have the capacity to mine, but we don't have funding to accelerate production. This one is coming from the Small Scale Miners Association of Zambia. Roger Makoloi is saying, why don't you allow mining companies to keep their foreign currency earnings in Zambian banks instead of allowing them to place them in places like Australia, Toronto, etc., so that Zambia can use that liquidity for lending? Standwell Banda is saying, what is the bank doing to protect employees from lending institutions that apply rates that are far above the MPR? The other one, Governor, is coming from Jay Peary. This one relates to Invest Trust, and he says, what's the update on Invest Trust Bank former employees' dues? In April this year, it will be 2 years since you took possession, and no positive communication has been made regarding the redundancy packages. Governor, you may attend to those.
Thank you very much. I see that's the appeal. We can just make the appeal, but really we can't compel them to lend to any, but because we are conflicted. Because if we tell lend and then they do, and then something goes wrong, they say, you see, you told me that, now why do you want to punish me? Because remember, banks, they hold the money, the deposits you hold, which banks have, which they lend out, is public money too. So that's why they have to be watched what they do. So we can't intervene directly. We can appeal to them that, But more importantly, I think there is a facility which we are promoting, which is maybe the DGO can shed more light. This is the Small Business and Growth Initiative. That's, I think, one of the tools that could be accessible by your group, because it's meant for small-scale players. So maybe yeah.
Thank you, Governor. I think the first point maybe I'll begin with is obviously one of the things for banks in terms of lending and risk is obviously cost of funding. So to the extent that we're seeing the cost of funding coming down, that should be supportive of overall ability for banks to lend to small-scale miners. The other is that there is a program I know the Ministry of Mines have been spearheading in terms of how to capacitate the small-scale miners. This is partly related to gold, but I think it's a broader thing than that. And I just raised that point because in many of these sectors, the real issue for banks to successfully lend is not just about giving money. There are a whole host of other things which people need to capacitate, whether it's the equipment, but also skills, training, markets, and all these other things. And I think the Ministry of Mines has been quite active in seeing how they can capacitate small-scale miners. On our side, the other question is also, are there ways in which we could support longer-term credits? Because if you think about mining, that may be one area. And as Governor has indicated, we should be launching this quarter what we were calling the Small Business Growth Initiative, which is trying to think about guarantees in a more innovative way, in which we can work with the commercial banks to lower the cost of credit for them to be able to lend to small-scale businesses, but layer this with support to the small businesses and a much closer working relationship with the banks themselves. So we should be launching this in the first quarter, and that's one of the sectors, I guess, which can be looked at. I think initially we were trying to target agriculture, given the importance of that sector. But I think once the scheme is up and running, that's something which I guess the commercial banks would be able to look at as well. Thank you, guys.
Yeah, then there was a question on why don't we allow mining companies to keep their dollar earnings in local banks? We don't stop them. Maybe that's the way to start this answer. They are free to do so. But if we were to compel them to do that, then we are stepping into the exchange control arrangement. Some of these, literally all of them, they have borrowed money elsewhere to invest in Zambia. And one of the undertakings is that when you borrow money and you are exporting something, that export proceed actually passes through the lender, or you have an agreement, if it's not a banking institution, that this money is put in an escrow account. That is an account which is controlled by the lender and yourself, so that you can repay your loan. So this is typically what happens. This money would go through the lending institution, and the excess is what they would draw for their operations or other things. But you recall too that not long ago, in fact, 2024, this was another big debate we had to go in. There was pushback where we said that all exporters must channel their export proceeds through the local banks. There was acrimony here. They said, no, this is exchange control. Why do you want to do that? We said, no, this is for information purposes, because we want to know if we are exporting so much, how much do we actually earn out of that export? Now, the thing is that any exporter in Zambia has an account, and these are basically Zambian companies. So as Zambian companies, we found it strange that you can object to reflect your earnings in a local bank. What's the mischief there? We didn't see any. But others were seeing that is a mischief. No, when you see the money there, what will you do? You take it away. No. We have one of the most efficient payment system arrangement here. It's sometimes it's T plus 0, which means that you can actually have same day value for your transaction that you make. But the norm in foreign exchange markets is T plus 2 or T plus 3. But we measure very well with the rest. In fact, one of my colleagues was telling me, who works for one of these multilateral institutions, he said no, he was surprised when he recently got there. They were advised that no, you can have accounts from across maybe 3-4 accounts across the world, the globe. But he was surprised that deposits from his salary into the Zambian account is just like that. But others, even within where that company is domiciled, it takes 2-3 days before it reflects. So this is a confirmation that our payment system is working very well. So when we made that directive, what we committed was that when the money comes, once we have ascertained that, yes, you have earned this, you are free to send it where you want to do. And this is what is happening. But the hope is that over time, as you do that, you see that there is a float. This is the money which is not immediately used. That money could be used by the local banks, because that's what banking principle is. The banks depend on the fact that not everybody will come to withdraw their deposit at the same time. That's what enables them to lend that money. So as the environment gets stable and more stable, then we should see some of that money not just saying hi to the account and then it goes. They will start to keep it for some time and then it starts being used. But we'll be overstepping if we started to say that, no, now that you have brought it, you are not going to take it. Remember what I said about money also, when one was asking about the reserves, where do you keep them? It's the same principle here. They have obligations somewhere, so they need to have that money elsewhere. But we encourage those who can to have accounts here, because banks here also lend in foreign currency, they do, which is part of the reporting that we do. So I hope that helps to explain that. Now, the protection of borrowers from banks who lend up. Again, here, we are in a slippery slope because you see, we don't have interest caps. Okay, we don't say that, no, this is the cap that you must say, because we saw that this has more adverse impact than it presents. Because you see, when you have a cap, what you are saying is that everybody is rated the same in terms of risk. So we moved away from that. But we do have a requirement that when you are borrowing, the bank or financial institution should fully disclose how much you are paying for that exposure or the loan that you have taken. There is what we call the key facts statement, which must be signed. Now, we recognize that when you are borrowing, you are not equal partners, because some, they just wanted to say, where do I sign? They don't even read the small print. You say, no, because there is pressure mounting. So where do I sign? I want to get the money. But you are signing to conditions which you are not aware of. So when challenges come, you come and say, no, but why are they doing this? Then they just waive this to say that you signed this. So these are some of the financial literacy, the education that we are providing, so that take some time, at least know what you are signing yourself to before you sign. But if you feel really ill-treated, we do have now also a division in our financial conduct supervision, which looks at consumer protection. We'll see whether these things were done in a manner that was so unfavorable to the borrower. So you are free to raise that. But as a first point of call, the banks themselves must have a complaints resolution officer at a relatively higher level so that you can lodge your complaint there. And if you are not satisfied, that's when you can escalate to this. If this also all fails, well, you reserve the right to go to the courts of law and fight it out there for justice. So we have seen all these happening. So we are publishing, I think we still do, interest rates which apply in different institutions. The view was that it gives you an idea of what other institutions are charging so that you can maybe shop around. We are also working on open finance where it will be possible that your good record you have built over years with your current banker can be made available to other financial service providers. This is not happening at the moment because of the protective mechanisms which are there. There's proprietary, say no, it's like they own you, that this is information you gave to me, I can't pass it on. So we are working on that so that it should be possible for you to enjoy the credibility that you have built over the years, and that should help you get better terms than you would otherwise do.
Yeah, sorry, Governor, I just wanted to add just 2 points. One area where we've seen a big complaint through our financial conduct supervision is in the moneylender space and in unlicensed operatives in this credit space. I think these are two areas which have really been the source of a lot of complaints. And we are in the process of revising the Banking and Financial Services Act. As many of you may know, the money lenders were registered under the Minister of Finance. Under the new act, they will come under the ambit of the Bank of Zambia. And then the whole framework of consumer protection, I think, can be more robustly supervised from there. So that's something which is being worked on. The other is just unlicensed people. And again, this is part of consumer literacy that, we fall dupe to people who they come to you very nicely that you can lend money and it's quick and easy. And then you find you're signing over your car, signing over your house, and you lose everything. So this thing of, consumer literacy is something which we are emphasizing a lot and will continue emphasizing. But we do need the help of the media and the help of the broader public to make sure that we are wiser. Thank you, God.
Okay. The last issue was on investors.
Oh, investors.
Yes.
Okay, I don't know whether I can see my colleagues from supervision. Calvin, are you able to say something here?
Yeah, I think maybe what we need to note is that the law specifies different stages in the liquidation process. And since the liquidation of the bank, we have undertaken most of the processes. We are at a stage where the claims have been verified by all the depositors and creditors. And the next step will be to file in the court once these have been validated. And alongside that, I think the process of disposing the assets has been going on. And once there are funds that are sufficient to be able to settle the creditors and depositors, then we'll make a determination through the liquidations committee to get permission to be able to settle the depositors. I think that's what we can say for now.
So the issue, maybe you just confirm that obviously the former employees are listed really as creditors to the institution. And so they are in that process of the liquidation claims. But maybe you can just emphasize that.
The legal general counsel advises that the liquidation schedule has since been filed. So it's just a matter of now liquidating some of the assets. And the staff fall in the category of creditors who need to be settled. And we have just a few depositors, I think, that we are holding on the claims. Thank you.
Thank you very much. Do we have any last questions? This is the last round. So if we have anyone who's got a burning question, please walk down to the backdrop.
Good afternoon. Not a question really, just a reminder to the question I asked. The question was concerning how much has been gotten from the mining tax system for...
Oh,
yes.
Okay.
That's the 317 million CNY in dollars, equivalent of about $46 million.
Thank you very much. Governor, there's another question from Paul Sambao, and we'll take this as the last. He says, given the recent improvements in the economy, including the kwacha's sharp recovery and appreciation trend, which is now even moving towards 17 kwacha per US dollar, alongside the continued decline in inflation towards single digits, what risks or external shocks does the Bank of Zambia see as the most likely to reverse these gains? Additionally, how prepared is the Bank of Zambia to respond should the appreciation or inflation trajectory shift unexpectedly? Governor, you may respond.
Okay. Well, I think you needed to be in our discussion room because that's quite a mouthful. these are things, you see, when we are making this, remember, our framework is a forward-looking framework. So we look at 8 quarters, which is 2 years. Now, we remain ready. That's what we say. If there are unexpected changes happen, that's why we are here, we report for work every day. We'll take account of that and make an appropriate decision. So this is why I think in our decision making, we base it on 3 factors. One is the actual level of inflation. 2 is the projected inflation over that horizon. Then we look around, what are the risks to that inflation? Will it go up or will it go down? So once we settle that, that's when we make the decision on what the policy stance should be. Clearly, if there is a risk which materializes after we have done this, then we will analyze that and take an appropriate decision. So the decisions are also based on data. We don't just wake up and say, no, now today we are going to have this. No, there is a very thorough way that we go through to assess where this is coming from, why is it happening, is it temporary, is it something which is going to be here for some time. So depending on what the data tells us, then we'll adjust our decision accordingly. So in a nutshell, what I'm saying is that what you are saying is what we take into account when we are making this. We look at this and say, okay, this one, yes, how do we mitigate it? If this happens, what do we do? So, but we have no constraint in terms of, say, if, for example, something bad was to happen, we can come back to you and say, look, there is a crisis here, we need to move this way. For example, we had the COVID. That amputated many of the things. We had to come up with a response that was tailored to that. We had the drought that too affected the economy very badly. We came up with the SRF. We are now working on something over a more longer term on the housing finance to also try to develop that, because many of you maybe even have houses which you bought out of your own money, but the practice elsewhere is this is financed. So you are sitting on what is said equity. You could have equity release so that, and I've seen that, I don't know if all of you have seen that, my bank sending me a message today that no, if you have actually a house, you can have equity release of up to 75%. So all these are things that we look at. So we are always on the lookout for information. We read different sources of information. We listen to TV, we listen to radio. That's why you see, if you look on the screen there, we have the Facebook, Instagram, and all these are channels through which we collect information and make an appropriate decision. So what you are saying is in the scope of things that we do. So if there is an emergency, we'll look at it and see what appropriate response we should provide. I hope that answers your question.
Thank you very much. So with that, we have come to the end of our briefing this morning. Let me take this opportunity to thank Musanza TV also for giving us a live feed this morning. Thank you to the production team, Fortress Media, ZNBC, Diamond TV. Thank you so much for the transmission. And to everyone who has made time to join us this morning, we want to say thank you. Until next time, thank you. Do have a blessed day.